a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hello, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about biotech ETFs. Why biotech ETFs? Because there's so much interest in this area of the market because of the healthcare crisis that we are facing currently. And because of the healthcare crisis, coronavirus has become the biggest priority for drug companies worldwide. They are working on three things: testing, vaccines, and treatment. So as you know, the economy has grinded to a halt because of all aggressive mitigation and containment measures. And while some states have started reopening it, any plans to reopen the economy on a large scale would really depend on a robust testing and tracing system. Then our lives can actually return to normal only when we have an effective vaccine for this disease. And hundreds of companies worldwide are working on vaccines, and several healthcare giants, including J&J and Pfizer too. And in fact, some of these may be available for testing this fall, but they'll be available for mass consumption globally only early next year at the earliest. And then companies are working on treatments for this disease, and they're working on some tailor-made treatments for this virus, but that will take a long time. So that is why many companies are trying whether some of the existing drugs which have been used for treating malaria or HIV or Ebola can be repurposed to treat this disease. And the one experts are most hopeful about is Gilead Sciences' antiviral drug remdesivir. And as you must have seen in the past few weeks, results of clinical studies on remdesivir not only drive Gilead's stock, but the entire stock market. People are depending so much on this one drug. So what I wanted to say is that instead of trying to bet on a particular company or some companies which are developing these treatments and vaccines and testing, it is better to bet on broader biotech ETFs because many of these treatments may never make it to the market. There's so much uncertainty. And also, many companies have said that they do not plan to profit from treatment for this disease because this is such a global healthcare crisis. And also they're spending a lot on manufacturing the facilities, and some of those drugs may fail. So let's take a look at the broader biotech ETFs, which have done pretty well compared to the market this year because of investor interest in this area. And I will be talking about three most popular biotech ETFs. So we are taking a look at the three most popular biotech ETFs, and they're very different in their approaches. So it depends on what you like. There is a fit for your liking. So the first one is the iShares Nasdaq Biotech ETF. The ticker symbol is IBB. It is the largest biotech ETF, and it is market cap weighted. Charges 47 basis points, and it's very popular with investors with almost 8 billion in assets. Now, to learn more about this ETF, you can go to the quote page on Zacks.com. And from there, you can go to the external homepage for IBB, the iShares web page. You will see that it has 210 holdings, pretty diversified, but because it is market cap weighted, a lot of weight in the top holdings. Gilead Sciences, which we talked about earlier because of remdesivir, is the largest holding with the 8.5% weight. Then Amgen, Vertex Pharmaceuticals, Regeneron, Biogen, and Moderna is also a holding, one of the top 10 holdings. It is developing a vaccine for coronavirus. So all these companies have been in the news. Then the second one that we are talking about is the SPDR S&P Biotech ETF. The ticker symbol is XBI, and it is actually an equal weighted ETF. So because of equal weighting, it has more tilt towards small and mid-sized companies. It is slightly cheaper, but this is also very popular with 3.8 billion in assets under management. So obviously this ETF will do better when smaller companies do well. And to learn more about this ETF, you can go to the quote page on Zacks.com. You can read our articles. We have some very good articles. You can read our research report. And then you can go to the external homepage, State Street's webpage for this particular ETF. You can learn more about the ETF and its holdings. So let's take a look at the holdings. Moderna, that I mentioned just a bit earlier, is the top holding. And you will see other companies like Gilead, Regeneron too, which are in the ETF, but the weights are much smaller here. Then the third one that we are going to talk about is by VanEck. It is the VanEck Vectors Biotech ETF. The ticker symbol is BBH. This is also market cap weighted, but this is different from IBB because it holds only 25 largest firms. So you get a much more concentrated portfolio with this ETF. This also charges 35 basis points, not as popular as the other two, but still pretty liquid with 400 million in assets under management. And to learn more about this ETF too, you can go to the code page, and from there you can go to the external home page and look at the details and the holdings. Amgen is the largest holding in the ETF with 12.7% weight, and Gilead has about 10% weight. So you get a very concentrated portfolio. The performance of the portfolio will depend really on the performance of these large companies. And I did take a look at the performance too. So here is the comparative performance chart versus the S&P 500 ETF. And you will see that the two market cap weighted ETFs have gained between 4% and 6% this year. VanEck is the best performer, whereas the equal weighted ETF is a little bit above 0%. And this year, the S&P 500 is down almost 13%. And in full disclosure, I own IBB in the ETF investor portfolio that I manage. Thanks everyone for watching, and I'll see you next week.